Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point.
A huge day for markets as the Fed cuts rates by a half a percentage point. Here to discuss that is Eric Diton of the Wealth Alliance, and I'm Lisa Bernhard with Reuters. Eric, this was a big, bold move. Even though some investors had priced it in, many thought that there would be a smaller quarter-point cut coming. What did you make of the size of today's rate cut?
Bravo, Jay Powell. Bravo. I am very happy. I've been saying for a while here that Jay Powell got a little behind the curve. If inflation's at 2.5, and you tell me that you want to be Fed funds 0.5 to 1.5% above that, that's 3 to 4%. What you doing over 5? And we're seeing a cooling labor market. So I've been really a champion of Jay Powell. I've been saying the Fed's medicine's working. I've seen inflation come down, but I really wanted him to cut last month, and he didn't. And so I would have been upset and disappointed if he came in at 25 bips. He came in at 50, 100%. That is the right move, and we're just beginning. But I really think the markets needed to see the 50 basis points to just move us up here. We really got behind the curve.
Now, there are some who sit where you sit who have said to me that if the Fed came out with this larger 50 basis point rate cut, that it could mean that they know something about the economy that the rest of us don't know in not a good way, that perhaps we're sliding into a recession. What do you make of that?
I don't buy it. I would buy it if the Fed funds were lower. But the fact that inflation's at 2.5 and Fed funds north of 5, you're talking about literally a 3% gap there. That is not normal. That is not normal. So we've got to get back to normalcy, and that's why I don't buy that. Stock market, by the way, popped, and I was a little surprised because I just feel like this has been fairly baked in. The derivatives market said 2/3 chance of 50 bips. That's what derivatives were saying. We've had a nice market rally right up to today. Lisa, we've lived by on rumor, sell on news 1,000 times.
As a portfolio manager, how does today's rate cut change your job, your outlook, what you do?
Really good question, Lisa, as always. We've been ahead of this, so I'm not really doing much now. I was doing a lot 6 months ago, 3 months ago, 2 months ago. We have been extending duration across the board. I mean, going back a year ago, our fixed income was a lot of floating rate type of stuff. We were just really trying to protect. And there are times in the bond market you have to protect, and then there are times you got to get greedy. And we've been in protect mode for a long time. I want to tell you something. 5 years ago, we started this firm, the Wealth Alliance. The return of the aggregate bond index since we started the firm is negative. 5 years, negative. So now, time to get greedy, extending duration. And honestly, we've really been expecting this, and we're where we want to be in terms of longer duration assets. So not much for me to do here other than just enjoy the ride.